Tesla stock down about 30% this past month. Now, Tesla is still clearly an exceptional business. The question is, how low does Tesla stock go from here? If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. In this video, we're going to talk about some of the latest developments from Tesla, as well as my thoughts on Tesla stock from here, what it could take to drive potentially 200% upside from here, and why has Tesla stock gotten bludgeoned in the last few days and weeks. And so first of all, in order to understand Tesla, you should first understand they've delivered fantastic results, 40% plus revenue growth, strong profitability. Now, it did see a little bit of a downtick in the second quarter due to higher input costs, but still overall very strong results, much better than the industry, growing earnings close to 60% on a per share basis, looking at strong free cash flow and sizable cash balances. Look, folks, this is what I want to see with most of my companies. I want to see above industry average growth. I want to see fantastic hyper growth like this. This means you're unrivaled. When you see profit margins and growth rates much better than the industry, you are doing something special. Tesla clearly is doing it. Elon Musk clearly doing it with, much better factories, much better processes. And that cash flow means it's sustainable, or it has been. The question is, will it be sustainable throughout the market cycle? That's what the market is, I'd argue, shareholders are starting to wonder about. Now, latest results on deliveries did come in a little softer than folks expected, but overall still really strong. So they did talk about some challenges with logistics, but still 42% growth in deliveries. Plus, given that some price increases, you're probably talking about 50% growth in revenue in the third quarter, give or take. Yet the stock is down around half year to date. And this is why it's so important to understand what drives stocks over time, what drives returns. Three things: valuation, fundamentals, and cash flow to shareholders. Now, Tesla, you don't have the cash flow to shareholders, so strike one over here. So then that leaves the last two. Fundamentals, really strong, 40% plus growth, real strong profitability, but valuations has gotten absolutely crushed. Now, that's partly because of the environment. Tighter policy from the Federal Reserve. I'd argue it's also gotten squeezed. Valuation has absolutely gotten crushed because of anticipation of potentially an economically slower cycle. Where are we going in the future? We're going to talk about that in a second. Now, part of the reason why the stock has gotten crushed is possibly due to exogenous factors to Tesla, such as Elon Musk sort of waffling. I'm going to buy it. I'm not going to buy it. I'm going to sue. They're going to sue. Who's going to sue? I'm going to lose. So instead of losing, I'll just say, hey, I'm going to reverse course and buy Twitter. But the question is hey, how is he even going to finance this? The interest alone on this deal is going to be around $1.2 billion, which Twitter can't afford. So Elon Musk is going to have to sell more stock to cover this deal. And, he's previously said, I won't have to sell more shares. And he said that in April, but arguably he's lost some credibility because then in August, he sold several $billion of stock. So could he become a forced seller? Worse, over 50% of the stock he owns is committed to personal debt. It's unclear how much of that is tied to margin loans. But, if you have a crazy enough ride in terms of Tesla stock price, you could see for selling from Elon Musk. I don't know what that price level is. He hasn't disclosed, but arguably it'd be a lot lower. But that does make me concerned. When you see that sort of data point, could you see a much lower, price because you get sort of forced selling? Then you get down 7% today because of the news that, hey, Elon Musk is under federal investigation over the Twitter deal. This does create the unexpected risk. Now, it's probably not greater than 50%, but the unexpected risk of hey, could you see even jail time? Maybe a fine, but could you even see jail time? Another reason, arguably, why the stock has gotten absolutely beaten up is because their show of Optimus robots sort of, underwhelmed. A lot of folks have gotten to see some amazing robot videos, dogs doing flips, going up and down stairs, robots doing some crazy gymnastics. And this one, you had three people pushing this little thing and you thought it was going to fall over at any moment. I personally look at this, I think it's super cool, but I think investors woke up to the reality that it's probably not going to have any material impact to the results over the next 5 years, is what I'd argue. And investors arguably look at, hey, what are you going to do for me over the next few years? And will this actually be a key driver? I don't think you're going to see it probably for the next 5 years. Now, Elon Musk will probably say otherwise, but let's see. The question is, where does Tesla stock go from here? First, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for annual subscribers. In full disclosure, this is not financial advice. So why is Tesla stock, getting hurt? So a couple of different possibilities. I already talked about the prospect of forced selling. I think there are some macro concerns as well, such as the cost on new auto loans, which is now higher than it's been this past decade. This could translate. This is a real, I'd argue, a leading indicator of what could drive their fundamental results later. And so this is the concern of, could you see weaker fundamentals in the quarters ahead because the cost for consumers is going up? So could you see a deceleration in their revenue in the quarters ahead, coupled with the fact that you're seeing several calls effectively saying, yeah, folks, a recession is going to happen in 2023. Prominent folks like Jamie Dimon, who runs JP Morgan, in a sense, this almost becomes self-fulfilling, because when you have the major bank heads say, hey, we see a recession 6 to 9 months from now, they're the ones that provide credit. They're the ones that make, booms and busts possible. So when a bank says, hey, we expect a recession, that means they're telling all their loan officers, hey, be extra prudent with your loans. So that means a little bit of tightening from them themselves. So then it becomes self-fulfilling. So if you see this, I would expect to see recession in the next year, in which case, what happens to Tesla's fundamentals? What happens to their actual sales growth? So I'm penciling out, thinking about a hypothetical valuation framework for Tesla. Tesla stock can go way higher, way lower, depends on their fundamentals. Also the sentiment, the valuation, but trying to pencil out a rational framework, currently around $700 billion market cap. I triple checked the figure. Yahoo Finance is inaccurate. Look at their growth. I'm still penciling out 50 to 60% growth this year. That's partly based on their, 60% revenue for the first half of the year. Another, let's say 50% from their deliveries and sales increase, price increase. Then the fact that they have arguably very reasonable and strong margins. I'm penciling out 20 to 25%. They've already proven that they can get there. The question is, will they be able to sustain it and get higher in the future? Slap on, let's say, a 25% tax rate. So looking at a company that arguably could be earning, around $14 billion a year versus $700 billion market cap. So around 50 times earnings for a company growing 50 to 60%. That could be very compelling. The question is, what's the growth rate in the years ahead? I'm penciling out 30 to 40% annualized. Musk has talked about 50% annualized, but once again, I think there needs to be a Musk discount for when things get achieved, and does that actually happen? So I'm looking at this and I'm saying, yeah, I'm seeing a tighter monetary environment. I'm seeing, calls for a recession. Is it possible you actually do worse than this? And that's really the concern, is that if you have, let's say, a really tough recession in 2023 and growth decelerates significantly, then arguably, even if you're still growing, even if they're still growing, let's say 10 or 20%, that deceleration would result in much further compression on their valuation. And I would expect to see a dramatically lower stock price, even if they're still growing throughout a recession. That's the concern. But over a multi-year period, if they're able to deliver, let's say, 40% annualized growth, that is still a very, very tough hurdle. Once again, Musk has talked about 50%. If they're able to deliver 40%, that means they grow from 80 billion in revenue, let's say this year, to around 460 billion revenue 5 years from now. Slap on, let's say, a 25 times earnings multiple, and you're talking about 200% upside. That's what it would take to see 200% upside over the next 5 years. But this is what gets me concerned, is that if it's not 40%, but only 30%, 30% is still fantastic. 30% is amazing. That means they grow from 80 billion to 300 billion in revenue. That is a home run from an operational perspective. The problem is, in that scenario, assuming 20% profitability, better than their last quarter, and assuming a 15 times earnings multiple 5 years from now, which, you could argue maybe it should be higher, maybe it should be lower. I'm trying to be conservative. Maybe you'd say, hey, it should be higher because they're still growing at a fast rate. I'd argue you're looking at a cyclical company, so you might want to, pull that in a bit. So I say 15 times, in which case, if they only do 30% growth, then you're looking at down 5% over 5 years. So that's the challenge that I'm looking at with this investment. Now, I do call out what I own to my subscribers at Unrivaled Investing, but I do want to see things where it's easier for me to pencil out, let's say 500% upside or 300% upside. And I don't have to make the assumption that, hey, you're going to be growing 40% a year. And this gets back to like Warren Buffett, where he says, yeah, I want to find these 1-foot hurdles that I have to walk over for attractive returns. And this completely flips investing on its head, because a lot of folks say high risk, high reward. That is not what it's about. It's about lowering your risk for high reward. Sort of saying, hey, what are the 1-foot hurdles where I can still drive dramatic upside? And that's the challenge that I face with Tesla, where I say, hey, even if you deliver 30%, which would be a home run, it's very possible the stock doesn't go anywhere over the next 5 years. So, I've sort of waffled myself about whether or not I want to own Tesla stock. But in this environment with a contracting monetary policy, a tougher economy likely in the months ahead, I want to see potentially even lower valuation where I could say, hey, maybe you only grow 20% annualized over the next 5 years, and I can still pencil out 100% or 200% upside. Would it surprise me to see Tesla up 200% over the next 5 years? No. If Musk is able to deliver fantastic growth, I'd say fantastic. I hope Tesla shareholders get that. But it's similarly, it would not surprise me to see it absolutely crumple, see a much, much lower valuation in the future if you do see macroeconomic pressures that result in a deceleration in their business. I personally want to find things that no matter what's going on in the cycle, maybe it's by owning, insurance companies, maybe it's by owning medical companies, maybe it's by owning alternative asset managers. Earlier this month, I called out Brookfield Asset Management. I own a little bit of it. I called this out to my Unrivaled Investing subscribers, where management, and the full write-ups at Unrivaled Investing, management's penciling out 4 to 5x over the next 5 years. Now, it's up to you whether or not you want to believe that, whether or not they do that. But here it is, management saying, yeah, here's how we get there. And by the way, we've done it in the past. So that's the type of situation that I want to see. Here are the hurdles for Tesla. Just make it so hard for me to get, crazy excited about, despite the fact that you're arguably getting it on sale. It's the 50% off sale because the stock price is down around 40% plus, and the valuation, the fundamentals are still quite strong. They're still growing. The question is the stock price anticipating weaker fundamentals in the quarters ahead? If you have a strong opinion on Tesla, I'd absolutely love to hear it. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.